All right, moving along then to problem 7-15. I have set up the sort of bank reconciliation sketch here. We have the balance per bank at the top and the balance per books at the bottom. With the bank, we often have outstanding deposits or deposits in transit, and we do in this case as well. We often have outstanding checks which have been written and haven't cleared the bank yet. Outstanding deposits or deposits in transit would be things that have been deposited to the bank, and so sort of the overnight deposits, you know, the envelope you put in the wall on the side of the bank. Doesn't actually get deposited to the bank until the next day, but the deposit is registered in the books as the previous day. That's what a deposit in transit is, or it could be actually a deposit that's sent between bank branches or something like that. So they're deposits that have been recorded as collected as receipts in the company's books, but they haven't actually been adjusted in the bank records because the bank hadn't received them at the time of the bank statement. So here we have a bunch of information. The cash account of Villa Corp shows a balance of $39.69.85. Now I've already added a couple of spaces, a couple of extra digits, because we're talking about pennies here, and that's kind of important. So the balance per books June 30th is $39.69, and the balance per bank is $41.50. So the bank thinks we have $41.50 in cash, and we think we've got $39.69. So turns out we're both wrong. And then the first piece of information is there were bank service charges for June of 25. So the question you have to ask yourself is that something the bank knows about and we don't know about? Something we know about and the bank doesn't know about? In this case, the bank service charges were known to the bank, but haven't been adjusted for yet on our books. So we're going to deduct those from the book balance. And that's $25. $25. Next, a bank memo stated that Bao Dai's note for $900 and interest of $36 had been collected on June the 29th. The bank had made a charge of $5.50 on the collection, so there's another service charge. It says no entry had been made on Villa's books when Bao Dai's note was sent to the bank for collection. So that's something we're going to add to our books. And it's actually $900, whoops, plus $36 of interest, $936. Next, receipts for June of 28.90 were not deposited until July the 2nd. So those are outstanding deposits, $28.90. And it also says checks outstanding on June 30th were $21.36.05. Then on June the 29th, the bank had charged the Villa Corp's account for a customer's uncollectible check amounting to $453.20. And of course, that's bad news, so we're going to call it NSF check. Stands for not sufficient funds. So our customer paid us with a rubber check, $453.20, and we're going to add that back because we deposited it, and it turns out that it wasn't really paid yet. Then a customer's check for $90 had been entered as $60 in the cash receipts journal by Villa Corp on June the 15th. So we wrote a check. We thought it was $90, and it was actually we thought it was $60, and it was actually $90. So that's going to decrease. So this is an error, accounting error, and we're going to subtract 90 and add back the 60 because it was actually recorded. Oh, hold it. We don't want to do that way. We're already deducting it, so we already have it coming out as a negative. So it's a $30 reduction in the bank account. It says check number 742 in the amount of $491 had been entered in the cash book as $419. Oi! So it was actually for $491. We put it in as $419. So there's another error. We need to record the $491 instead of the $419. Transposition error. Oh, there we go. I guess I can't be too hard on these accountants because I just made an error myself. So there's another error for $72. And, oh, we forgot the service charge. There was a second service charge. So let me just give myself a little bit more room here. another service charge for $5.50 on the collection of the note. Okay, and check number 747 in the amount of $58.20 had been entered as $582. Oh, that's a good one. So that's actually a good error. It actually increases the amount of money we have. So we thought they paid us, or we thought that we wrote a check for $582. So it's $582 minus $58.20. Alright, so that's a positive error. So we have the collection on the note. Both checks were issued to pay for purchase of equipment. That will help us with our journal entry in a moment, but we're done with that. Then in May 2017, the bank had charged a $27.50 Wellacorp check against the Wellacorp account. So the bank had an error. That's good. So we need to add that back to the bank. So let's put that up above here. The bank had charged, oh, the June bank statement indicated that the bank had reversed this charge and corrected its error, so there's nothing to do. They had made a mistake in the past, but they corrected their error, so there's no more error. Okay. Now, let me see. A customer's check for $90 had been entered as $60 in the cash receipts journal. I think we have our error here in the wrong side. It's actually a positive error. Let's put it up here. Now, what that we're talking about paragraph 6 here. It says a customer's check for $90 had been entered as $60 in the cash receipts journal. So we actually get more money. So we get 90, and we thought we would have got 60. Okay, so let's see how we do with all of this. Alright, let me, okay, there's a couple of ways we could actually do this. If there were several items that we were adjusting to the bank, we would probably just sum it up and have a subtotal here. But I'm just going to take that as minus 2136.05. There we go. Now let's add them up. The sum, and okay, we need to get the sum to cover this whole thing. Whoops. Please, the whole thing. And of course that's our, presumably that's our corrected bank balance. Of course we don't know that until we check the other side here. So here we actually do have a little subtotal. So here we can do a bottom border, and we'll do another bottom border over here. Okay, and then we add all of those up. So the sum is the sum of those, and then we do another sum over here. Take the sum of all of those, and of course that's going to be negative, so we can put that in as a negative number here. Okay, what is this 72 down here? Whoops. Alright, I'm going to sneak it in here. Insert. This is an error. And I'm going to put 72 right in there. Actually, what I'm going to do is copy that and put it in up here. I don't have it included in my numbers. Okay, so the 72 was the difference between 491 and 419. And so let's do our little accounting final total indicator, and then I'm going to hit the sum, and the sum is going to include all of these all the way down to there. There we go, 4903.95. Yay! So that's the correct number. Now a lot of people do bank reconciliations to reconcile the balance per bank down to the balance per books, or vice versa. But what you really want to be doing is you want to be calculating the corrected amount. So the corrected amount from the bank's perspective, those are just outstanding deposits and outstanding checks. Presumably they're going to clear in the next month. So we don't have to do anything. If they'd made another error, as they had done in May 2017, we'd have to call and tell them, and then they'd fix it, and we'd see the error being corrected in the next month. But all of these things down here, we actually have to correct ourselves because they're errors, they're differences between the balance in our books and what the balance should be in our books. So we need to make journal entries for all of these items because those are the ones that need to be adjusted. So let's, all of these should have a 30th of June date. 30th of June. So we're going to debit some things, and we're going to credit some things. So let's start with the first item here. This is an error for a deposit from a customer. So we need to put cash increasing, and well, I guess the cash increase is actually the full 1489.80. And then why did it all increase? Well, the accounts, presumably the other side of this entry would have been accounts receivable because it was received from a customer. So they actually paid us 90. We thought they paid us 60. So we thought they owed us more than they actually do. The next one, a collection of a note. So this would be note receivable, and it was $900. We also made some interest. So the interest is interest income, assuming we didn't set up any interest receivable previously. And then we have another error. This $523.80 error is a reference to the fact that we recorded a check that we wrote as $582 when it was actually $58.20, and so presumably that was set up in accounts payable. So the accounts payable would go up by $523.80. So we recorded it as being a $582 payment, and it was actually a $58 payment. They're going to be looking for some cash. So that takes care of all of these entries up here. And then, so these are credits. And then we've got some entries to make on the other side. And we'll eventually get to cash. So there are 1, 2, 3. Well, there are 2 service charges there, so we'll set that up as service charge expense. And it's actually the 25 plus 5.5, so $30.50. So it looks like I've run out of increased digits. Since we're dealing with pennies here, we need more digits. There we go. Okay, so $30.50, the service charge. Then we've got another error, and the error was, in this case, the difference between 491 and 19. Check number 742 in the amount of 491 had been entered in the cash book as 419. So we thought we paid 419. We actually paid 491. So in this case, the accounts payable is going the other way. It's good to know we're equal opportunity error makers. So this one is a $72 error, decreasing the accounts payable. We paid more than we thought we did. And then we have $453.20, which is that shyster who gave us a rubber check. That's an account receivable that we have to set up again. And so that will be $453.20. And of course, the balancing part of the journal entry is the cash. And that will be $555 0.70, just like that. So that reflects the fact that the bank is reconciled. We have the bank reconciliation completed, and we have the correct balance in both parts of the reconciliation. And then we have all of the entries that we had to make to correct our books. So basically everything that adjusts the balance per books down to the corrected amount. We need to make journal entries to fix all of those, and we have done so. And that's all there is to it. So we're done. Problems, the in-class problems for Chapter 7. I'll post this on Moodle. Thanks.